Hello, everyone. My name's Esdean. Let's talk crypto. I think that's the first time I said Esdean instead of Dean. That's my full name, by the way, Esdean. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 17th, 2023. And we are preparing for a massive move in all of cryptocurrency, right? An explosion, as I termed it in the title, right? A really, really big move, okay? And this is not hyperbole, and I'm going to show you why. If that interests you, then watch until the very end. Hope you're having a great day. All right, let's get started on the small time frames. Actually, let's actually start off with the high time frame read. Okay, the high time frame read, I think the most obvious read here, okay, is this. Here we're looking at a high time frame weekly chart of the entire cryptocurrency market cap, okay? So this is everything in crypto, not just Bitcoin, but all the altcoins, okay? And you can see here what has happened for the past 2 to 300 days. Past 2 to 300 days, we've been sideways. We've been accumulating in this channel, okay? Sorry, 1 second. So this channel, it's kind of like a falling wedge. You could say it's a falling wedge, or you could say it is just a regular channel, okay? Sorry, I would draw it like this if it were a regular channel, okay? You could draw it any way. It doesn't really matter, to be honest, because whether it's a falling wedge or a regular channel, right, you seem to be getting a breakout of this area. Okay, I'm more partial to the falling wedge, and I'll tell you why in just a second. But if you looked at it in this way, what do you see? You see that this resistance that's been in place for about, let's see, 230 days, because this is the weekly chart, yeah? 230 days, so it's more or less accurate. This resistance to the upside has just been broken. Okay, not only has it been broken, but this resistance has been retested. Okay, what do we always say on a high time frame, or any time frame, actually? What's the word I'm looking for? Technical Analysis 101. There you go. Technical Analysis 101. You break resistance, you retest it as support, then you break out, okay? Same thing with a support. You break support, you retest it as resistance, then you break down, okay? So essentially, if you really pay attention, you can see that very same thing happened, okay? And let's go on the smaller time frame to really see what I'm talking about. Let's do daily. Oh, let's do 4 hourly. Okay. And this is what I'm talking about. Break of resistance, retest, breakout. Okay? And I know it's modest. It doesn't seem like much, but that is a veritable retest of the support. Okay, or you call it support now that you're above it, but it's a retest of the resistance as support. That is a veritable RS flip that you see there, okay? So that's the entire cryptocurrency market cap. That is all of crypto, okay? So when in the title I showed this graphic, this is representing all of cryptocurrency. I know a lot of, analysts, YouTubers are talking about this is when you should expect metaverse to pop, and this this is gonna go first, or that's gonna go, or it's very bullish to buy DeFi or whatever. According to the technical analysis, a very simple but I think straightforward and probable technical analysis of the entire cryptocurrency market, right? Using this chart as a proxy for the entire cryptocurrency market, the entire market is going to pop. Okay, the entire market just broke a 300-day, no, what did we say? It was 230-day resistance, and is likely to take off. Okay, so that is I always say on this channel, I love simple analysis, straightforward analysis. I get a little involved. It gets a little technical, gets a little wonky, gets a little complex, maybe, if you will, on the smaller time frames, and I welcome that. It's fine. I use it all the time. That's how you can, use high leverage and still protect your position, right? You can't do that on the weekly time frame. You gotta kind of use a few more involved, more intricate strategies, I believe, on the smaller time frames, to place more risky trades, I think. But if your knowledge of technical analysis ends at support and resistance, and how support and resistance is played on weekly time frame, you'd be perfect. You'd be great, because you know more or less essentially when to buy. Buy on support, sell at resistance. Had you bought at support, this is support of this channel, this wedge, whatever, you would have been very well off. As you can see, big move from support. This is resistance. We broke resistance. You should say in the trade, because we broke resistance, right? So again, it's all really simple. I know sometimes it sounds crazy and hard to understand, but at the end, it is simple, although it can get complex, okay? But fundamentally, it's simple. And I like starting with the simple analysis, because I think that's the takeaway right there. All things being equal, whatever the Elliott wave count is, small time frame analysis is, the high time frame analysis says buy, okay? So yeah, and if we go on the weekly time frame, just corroborate that with our indicators. Our momentum indicator, stochastic RSI, is crossed bullish on the weekly time frame, and it is not anywhere close to topped out right here, right? So this should indeed, in essence, continue to, at the very least, this area right here, okay? So that is how we're getting started. Now, we can get an even more particular in our analysis, and that's what we're going to do. So let's look at our Bitcoin chart, okay? Actually, let's look at the DXY. Ooh, DXY is exciting right now, okay? Akanksha says, hello, Akanksha. Mr. Husama A says, I have just joined. Kindly tell me the topic. We're talking crypto. Hi, Mr. Husama. All right, let's look at the DXY. The DXY is really exciting for me right now. Okay, it should be exciting for you as well. Now, why? Why is it exciting? Quite simply, if you all understand why we look at the DXY in the first place, the DXY is a great indicator for Bitcoin and the rest of the risk-on assets. Because when the DXY goes down, Bitcoin goes up. When the DXY goes up, Bitcoin goes down. Okay? That's essentially it. That's the simple sort of reasoning. And we have data to back that up, right? Yeah, 10 years. 8 to 10 years, I forget how many, of charts to show that relationship is intact. Now, why am I excited by the DXY right now? Very simply, this is a channel that we've been in since January 12th, okay? So that's about a week, almost a week, okay? Not yet a week. This is the hourly time frame. You're at resistance right here, okay? You're at the top of the channel, okay? This is really simple. Once again, technical analysis doesn't have to be complex. And I think people complicate things that they don't quite understand. So if we have a good handle on our read, on our analysis, we should be able to explain it quite simply. And the concepts are always kind of straightforward, okay? Straightforward concept, DXY is at resistance right here. You can clearly see, you draw a channel. This is the price action in this channel. At resistance, it should reject back down. Now, question is, if it does indeed reject back down to the bottom of this channel right here, what will it do? Will it bounce back up? Well, it just did that right here. It just did that this morning, okay? It hit the bottom of the channel, bounced back up. There's only so much bouncing you can do from the bottom of the channel. Ultimately, now let's zoom out. Ultimately, this channel has to break up or break down, okay? So if you just look, you zoom out for a second, that is clearly an impulse or a move down, okay? To get into this channel. Now we're in this channel. Question is this channel going to reverse or is it going to continue down? And it's more likely than not, based off a lot of factors, but let's just take our initial, our momentum indicator that we like to use, our stochastic RSI momentum indicator on the 4-hourly time frame. What does it tell you? It tells you that this channel is likely to flag down, meaning this is a bear flag in essence, okay? And it looks a little something like this, okay? So you should be expecting a move down based off the fact that your 4-hourly momentum indicator is completely overbought. So it should come down, okay? What's more, let's go back to the time frame that we were just in, the hourly time frame. What do you see there? You see overbought price action, okay? Or, sorry, overbought momentum. So again, you're likely to get this move down. And it's not just a move down to the bottom. Whoops, let's draw that again. Not just a move down to this bottom of this range, but a breakdown of this range. That is exciting. I'm going to tell you why it's particularly exciting in a second, okay? 15-minute time frame, because we're degens and we like to look at really small time frames. Same thing. You're overbought, you're coming down. Now, so what, you say? We're going to break this channel to the downside. So what? I'll tell you why that's really, really, really exciting. Okay, let's go on the daily time frame, even higher time frame. And guys, I hope you're paying attention. This is how you use time frames. So many people, so many crypto YouTubers that I watched, when trying to figure out this technical analysis thing, that have massive followings. We'll talk about like the 23-hour time frame, and then it's the hourly time frame, and no, the 3-minute time frame and stuff. Like, guys, you don't need a mass amount of time frames, just a few, and all you're trying to do is, it's essentially what you should understand about time frames is you're looking at the same thing with a different perspective. So if you're looking at the weekly, the daily, the monthly, the hourly, the 4-hourly, whatever time frames you choose, you're essentially looking at the same thing. And you should be able to corroborate them. Not say, well, it's bullish on this time frame, but bearish on that time frame. Like, that doesn't really make sense. I get it, but you should have a full picture as to what you're looking at, okay? So when we go up and down time frames, all we're trying to do essentially is get a better understanding, like a 360 view of what's happening. And the same thing's happening. It's not one time frame, this is happening, on another time frame, that's happening. No. On all the time frames, this is a bearish move. On all the time frames, this is an intra-wave correction. Do you understand? Like, let's not confuse things. Now, back to the topic at hand. This is particularly interesting. A breakdown, even a small breakdown from this area, because we're at such a crucial area. Look at that right here. Take a trend line. Do you see that? you're essentially breaking a long-held support. When you lose this level, you're going to be breaking a long-held support. This support was created back in May, okay? At the beginning, quite poetically, at the beginning of the bear market accumulation. If you look at most of the cryptocurrency assets, you'll see that May was the start of the sideways price action, okay? In Bitcoin, Ethereum, that happened in June, but most crypto assets started going sideways in May, okay? So, this support that we're about to break is about 300 days old, 230 days old, yeah? So, this breaking is, what's the word I'm looking for? It is, why can't I find this word? It is coincident, yeah, that's the word. It's coincident with a breakout of the cryptocurrency market. Like when we talk about the cryptocurrency explosion, this is it, right? The DXY is what moves the markets. This is the underlying asset. All of Bitcoin, most of all the cryptocurrencies, all of the stable coins that you use to trade for your altcoins or your Bitcoin. This is all denominated. This is all regulated by this dollar, US dollar currency index, okay? And so when the dollar breaks support, loses relative value, then all of those risk-on assets, dollars, stocks, altcoins, stocks, crypto, Bitcoin, all that stuff go up. So this is really, really exciting. You just have to zoom out. Again, use the time frames to understand the context from different perspectives. But the various time frames shouldn't confuse you. Like, sometimes some analysis you're looking at, you're watching, and it's like, what are you talking about? Like, it's bearish on the 15, it's bullish on the 7, it's bearish on the 3 minute, and it's bullish on the 4 hour. So yeah, it could go up, it could go down. It's like, it doesn't need to be that complicated. So yeah, this move coming down, not just to the bottom of this channel, but breaking this channel, is where that crypto explosion happens. Okay? So that's the DXY. Conscious says, do you see 8 trillion market cap till summer? I don't know. Let's go back to the market cap, or the total crypto market cap. I don't know. I never look at the amounts. I don't look at the total crypto market cap that much, so I don't like but we can do a really quick analysis of it. And it would just be what would it be? Let's go on the monthly really quickly. Yeah, we would assume, all things being equal, that this is similar to what you're getting in Bitcoin. So if this in Bitcoin is minor wave 1 and this is minor wave 2, you should have something like a comparability, or comparability in time and in price. So 426 days up, approximately 400 days down, right? Consolidation reversal pattern. Yeah, so this is very likely going to do what Bitcoin is likely to do. And based off of, just basic Elliott wave theory, you can project your next. You not only can project the time for the market cap target, but the price. Okay, and the reason you can do that is these are Elliott waves, and you have data point of wave 1 and data point of wave 2. So what you would do is quite simply, let's just change this. You would take your Fibonacci extension tool from wave 1, right? Projecting wave 3 is you take wave 1, retracement of wave 2, and you use that orthodox low, right? Not this low, but this low right here, orthodox low. And you project the phi ratio between the phi ratio and the 2 Fibonacci extension. So that gives, you said 8 trillion? No, way higher. It's 1.618, right? Which is 130 trillion, between 130 and 436 trillion dollars. Okay, that is the straightforward analysis. Obviously, you can always get an extension of wave 3, but typically wave 3 ends between these 1.618 and the 2 Fibonacci extension, right? That's just a basic Elliott wave analysis. What's more is we can guesstimate based off of, Elliott wave theory when wave 3 will hit. And to do that, you take your, where's this? Your trend-based fib time, okay? You would take your wave 1, retracement of wave 2, just like you do with price, right? It's not just price that you can analyze. You can also analyze time, because price and time are two sides of the same coin. The way you get Elliott waves, and I didn't learn this until later, much later, but if you really think about it, you don't have anything without time. You don't have anything without price. A lot of times we ignore time, but it is a function of these wave progressions. So what you can do is you can target the 618, okay, that would be right here, the 1 Fibonacci extension, or the 1618, okay, and what I did was target the 618 with Bitcoin, okay, and so that would give you, on the monthly chart, around March, so March, April, May, I wouldn't say that's summer, right, that's more spring into summer, okay, so like midway, March, April, May, whatever seasons those are, okay. So yeah, that's it. So it's the same projection actually as you get with Bitcoin, and that shouldn't surprise anybody. So that's how I would do that. Okay. And yeah, so now back to our actual, watch list. Looking at Bitcoin's price action on the smaller time frame. This is a daily show, so that's also what we do. Excuse me. This move is, a lot of people, when I talk about these projections, are hard pressed to understand or even imagine such high targets, and I don't blame them, because it's like we haven't really moved, and you're saying we're gonna move how much in how long, but this is also one of the reasons why, when we were down in this area right here accumulating, and we're kind of still down in this area, but when we were in this accumulation range, I was saying I'm gonna just accumulate and not worry about whether I'm accumulating here or here or here, because I don't care, because the projection's so much higher. I won't care if I accumulate 16,000 Bitcoin or 20,000 Bitcoin. Once Bitcoin's at 1 million, it's all the same to me, right? And also, once things start going, it's going to be quite difficult to catch. Okay? I want to make that point. I think that's a really good point. Once things start going, it's going to be quite difficult to catch. Because these waves, these impulsive waves, are one, impulsive by definition, and two, hard to count as they're forming. So once you get in, if you're talking about getting in on spot, yeah, fine, that's simple enough. But getting in on leverage, building leverage positions with such volatility, you're bound to get wrecked. It's just too much going on too quickly. So this is why I really think that it's smart to read on a high time frame, get in when you can, and then get out of the way. And this will be clear very soon once this explosion starts. Now, when will this explosion start? Okay. And the answer to that, quite simply, two answers to that. when this DXY finally breaks down, okay, and we get a proper breakdown of this channel, that's one of the answers to when we will get this crypto explosion. So quite soon, as if you look at the DXY, it seems like it'd be quite soon. And two, looking at Bitcoin, yeah, this area right here is confusing a lot of people, because essentially you're putting in a rising wedge. You're consolidating, okay, sideways and up. It's extremely bullish. So instead of just consolidating sideways and down, which most people expect in consolidations, you're consolidating while increasing in price. This is how strong the buy pressure is, and that shouldn't surprise you. If you've been watching or listening or paying attention to the market for the past 300 days, you understand that the past 300 days in these accumulation channels, I'm not just talking about Bitcoin, but every asset, have essentially been building buy pressure. You're building buy pressure, you're exhausting sell pressure, you're building orders. So when you do mark up, and you have even here what the Wyckoff people call a spring, where you test the bottom of the channel, okay? You should expect this to happen, and you should expect a breakout where you don't really, your consolidations are quite aggressive, okay? That's what I mean. Those sideways and up and to the right consolidations are what you see in really aggressive consolidations, like what we're experiencing right now, okay? And so a lot of people who are used to, and this is, I guess, normal when you just start doing technical analysis, and you see in the textbook consolidations look like this, consolidations look like that, then that's what you expect. But ever so often, you do see what we call a running flat, okay, which is a more aggressive up and to the right consolidation, kind of like what you get here. I know it doesn't look like that, but it's essentially a running flat, where your final wave down doesn't come down to the level of your initial A wave, okay? That just means it's really, really bullish, all right? And so that isn't something that you see every day, so most analysts are not going to read it properly. Most indicators are not going to read it properly. A lot of people are getting out of their positions or even going short, okay, which is such a shame. Imagine having enjoyed 25%, whatever this was, since the new year, however much we went up. It was a decent bit, but nothing to write home about. It's unlikely to be something that's going to change your life or, do anything like drastic, right, for you financially, but yeah, 20 some odd percent, which is great. It's not bad, but it's just the beginning. That's just Bitcoin getting started. It's kind of like going at a theme park and you're at a roller coaster and you start winding up, and you know to the top, and then the actual roller coaster fun and amusement excitement starts once you fall down and you start to go down from that cliff or that edge that you just climbed up from up to. Okay, that's essentially what you're seeing here. Like, we went up slowly, deliberately, and I know some people think this is a crazy pump and oh my god, it was so fast. It was actually quite deliberate. As far as the bull market's concerned, this is a deliberate matriculation up to this level. And if you look on a higher time frame, what you can see is this level is one of the first levels where you have very little resistance between where we are now and your next target. Okay, so expect that to be closed relatively quickly. Okay, so that's what's going on. It was a slow ratcheting up of price action to these levels, and once you do break out from that, and more specifically, we can give a price of what this breakout would look like or where this breakout would be. So on this chart, if you take this as a rising wedge, the breakout in question would be around 21.8. Okay? It would be around 21.8. Actually, let's get even more specific. We can use Fibonacci to get even more precise. And this is how we'll do it. Okay, so what I'm doing here is I'm taking the phi ratio of this initial break of structure, which is at 21.874. So yeah, about 21.8, let's say 21.9. Once Bitcoin breaks 21.9, that's when you can expect the fireworks, according to this analysis, according to my analysis. Okay, so that is the short time frame analysis. We gave the high time frame analysis. What we can do now is look at some altcoins, and what we should see with altcoins is the same story, right? Because this is all part and parcel of the crypto market and movements in the crypto market. Kongsha says, sell in this spring and go away or hold up until 2025. It really depends. I can't say. I don't know what your abilities are, what your tax burdens are, like, what country. Everybody's going to be different. All I know is that it's likely, based off of the analysis, as I said, and I'm just gonna go over this really quickly since the question was posed. If you go on the high time frame and you look at our master chart, and if you guys follow this channel and my work, you'll know that I am planning to sell between March, April, and May. Okay, so March, April, and May, I do expect for us to be in this region between 1 million and 4 million per Bitcoin. After which, I do expect a year-long bear market, bottoming out between March, April, and May of 2024. That's it. And this analysis I've had for many months. If you guys follow the channel, you'll know I've had these counts in for quite a bit, and thus far, it's been it's worked out, right? But yeah, as you can see even more clearly on this chart, on this high time frame chart, this is essentially the big resistance that we're at, that we're threatening. Okay, you can see that right there. There's a massive resistance we're in this channel for quite some time, but we're at resistance, and we're about to break out of that. Okay, and what you should see from here on out until at least when six figures is a lot of bullish momentum, a lot of strong volatile upwards momentum. Okay, once we hit this 12-year resistance, we will encounter significant resistance. Okay, and that we can talk about when the time is right. It's a bit premature to discuss that now, but yes, that's what I'm seeing. Okay, let's talk about Bitcoin dominance for just a second before we go into the altcoins. Okay, Bitcoin dominance. This is a measure of Bitcoin's complete or total, or the percentage. Okay, it's a percentage of Bitcoin's market cap against the entire cryptocurrency market cap. If Bitcoin dominance is high, it means Bitcoin comprises a majority, or it comprises a majority of the cryptocurrency market cap. If it's relatively low, that means other cryptocurrency market capitalizations are gaining against Bitcoin. Okay, right now what you can see is the total Bitcoin dominance is starting to break down from this range. It's been in this consolidative range for quite some time. You can see big impulse down. We started in September, going sideways and a bit up. You may reach this resistance, so you may go up a little bit more, but before coming down. But you're essentially at a point of resistance where you're looking to come down from this channel for Bitcoin dominance. Okay, and you can see that quite clearly in the momentum indicator, in the Skarsgård momentum indicator. So what's that mean? If Bitcoin dominance comes down, that means, again, other cryptocurrencies are gaining against Bitcoin in their market cap. That only happens in a bull run. This is what you're seeing here. So lots of different indicators essentially saying the same thing, okay, if you're paying attention. Okay, now let's go into our small time frame analysis of various altcoins and Bitcoin. So Bitcoin we already did. We said 21.9 was where the fireworks start. So I like that. Another thing I want to show. Sorry, it's just something I can't get out of my throat, it seems. All right, Bitcoin on the 4-hourly time frame has completely bottomed out momentum wise. Okay, so I said this yesterday in yesterday's video. If you're bearish, you're praying for it to come down, and you're really nervous because maybe you're in a short and you can't get out of it, I would cut my losses at this point, because this does not look good for any continuation to the downside. What do you see on the 4-hourly time frame? You see a double bottoming, right? Very clear double bottoming. And how did it come down? It came down, momentum completely reset on the 4-hourly time frame with the small move down and a subsequent sideways up consolidation. Again, this is why we're saying this is a running flat. This is a version of a running flat. For those of you who may not know, running flat doesn't only have to be a simple correction. You can have a running flat in a complex correction. Okay? So that would also constitute as a running flat. So yeah, you're completely bottomed out on the 4-hourly time frame. You bottomed out multiple times on the hourly time frame, okay, while coming down and making higher highs actually, and higher lows. So this is very, very, very bullish. These rising wedges, I think, break out 60 to 70 of the time to the upside, okay? If you're a pattern analysis person, you probably know that. You come up, rising wedge, you're likely to get continuation like that, okay? So again, 21.9 is what we really want to pay attention to in terms of what should yield big, bold moves in the market. And when I say big, bold moves, I mean big, bold moves. The type that you may get mainstream media discussing Bitcoin again, saying, "Oh, it's showing some really good signs," but again, people aren't going to buy in mass until Bitcoin probably goes and makes a higher high, or an all-time high, and then goes into six figures. But those of you listening, watching this, you're way early. You're way early. Okay, most people don't even know what Bitcoin is, to be honest. It's surprising, but yeah, a lot of people don't even know what Bitcoin is. You think everybody does, but that's not true. All right, Cardano. Let's actually zoom out to the 4-hourly because I want to show you that that momentum that we have on the 4-hourly. It's really encouraging for the bullish. Where's my pen? Sorry. Oh, there it is. It's really encouraging for a bullish move, okay? As you can see, much like Bitcoin, Cardano, it kind of zeroed out, okay? A lot of times on the small time frame, if you want to see what's going on, what you're likely to get, look at the 4-hourly time frame. Really good indication of momentum and price action. I love the 4-hourly time frame. It's just, it's just a good happy medium between daily and daily and a 15-minute, because I use 15-minute, hour, 4-hour, daily, weekly, and monthly sometimes. So 4-hourly is like a good, reasonable intraday, but also kind of flirts with being a higher time frame. In any case, you can see it's very clear you're coiling up here, okay, with Cardano, and you're completely bottomed out, likely to break up and out, okay, very likely to break up and out. And much like Bitcoin, you're at important resistance. You're at a point where it's unlikely that you reach, your next resistance is probably going to be around 44 cents, but you may even go all the way up to 69 cents, okay? But at the end of the day, you don't want to get in the way of these moves, because even when you do see resistance, it could just be a quick intra-wave correction. Okay. I want to go out on the daily a little bit for these. Okay. Yeah, that's what I want to do. Algorand. Okay. For those of you using Phoemax, just a reminder, and if you use Phoemax, you probably already know this, but they are phasing out their USD contracts. So if you have any positions using USD as sort of the underlying asset, I would close those sooner than later, because they might just phase them out and then force close them. And you don't want that, right? You want to keep those open for the entirety of the bull market. So I still have one such position, and that's why I have an alarm set. Once it's in profit, I'm going to sell off and do something else with it. In any case, Algorand, you can see that this is likely to come at least to this region right here as your next significant resistance, okay? Like, you can say the next significant resistance is over here or over here, but you're at least coming to this area and then this area, and then there's very little resistance after that. Okay, so that's what I'm seeing with Algorand. Bonk, this is one of the meme coins that I got into. It's fun. This is not financial advice. You do what you want. But I think this is very promising from a technical vantage. Like, this is a new listing, so you have that sell off. A lot of people who got the airdrop just sold off. But what you get after is what's really interesting. You get 2 degrees of AB basing and a pivot. Here you see your A wave, your B wave. Okay, this is what we call a zigzag. Okay, so that's your first degree of AB basing. You get a second degree of AB basing in a zigzag once more. Okay, and now you get a pivot. Okay, so this is really, 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 really bullish. Why? Because that typical AB basing, 2 degrees of AB basing and a pivot, that typical accumulation channel that you see sideways occurred completely up and to the right in a diagonal. That's how bullish we are here, right? You're essentially getting 2 degrees of AB basing and a pivot while only printing zigzags going up and to the right. And so you're getting into your impulse right here. The big fireworks in this coin happen once you break this resistance right here, okay, which is essentially the top of this range and the bottom of this wave 4 correction right here. So around this level right here, I do expect triple digit gains, daily triple digit gains here. That is going to be exciting. Dent is another one that clearly you can see here. These assets are so bullish. They're putting in corrective moves that you can channel up and to the right. Okay? Sorry, I don't know why I can't draw this. There we go. So you can see that this is corrective. This you could say is impulsive. But it's very choppy, okay? And some people who they dabble in Elliott wave, maybe they're not very strong Elliottians, but I've heard people say, and I've even heard really prominent analysts say this. Okay, people who have large followings all over TV, they say if it's overlapping, then it's corrective. But if it's clear and sort of the intrawave corrections don't overlap with the upwards price action or downwards price action, right? In this case, we're dealing with upwards price action, so that's what we're talking about. Then this is impulsive. So for them, this is corrective. This is impulsive. Generally speaking, yes, but not always. And this is something that a lot of people, it's a mistake, an error that a lot of people are making. A lot of people who refuse to get involved in this. All right. And when I say this, I mean just the general trend in crypto right now of us going up in a choppy, kind of overlapping manner. That is actually common. If you study charts, you'll see that leading diagonals, right? This is what we call leading diagonals, are common in trend changes. So big trend changes, high time frame trend changes. So we're on the 4-hourly time frame, but obviously this is a weekly trend, as we discussed yesterday. You're likely to see at a pivot a lot of leading diagonals. It's essentially price having to deal with all of the buys and all of the sell orders that had been accumulated over a large period of time. And so as a result, it stunts or stymies the upward trajectory of the price action. But it doesn't mean it's not impulsive. It just means that there's a lot of buying and selling at these levels. But once it leaves these levels, then it goes up. This is why a lot of people will miss it. Because they don't, their reads aren't nuanced, right? Obviously, you don't always get a leading diagonal, but in these cases where you're just leaving a bear market accumulation, you should even expect a leading diagonal. Okay? Dodo, really, really, really bullish. Look at this. Look at this. So I drew this downwards resistance, broken, retested, and basically you're putting in a leading diagonal up and out of this. Fireworks come when you break this right here, which is clearly a resistance, a horizontal resistance. Akanksha says, when will people FOMO in on BTC? I have no clue. Post 30K, probably. Maybe post 30K, post 60K. I think people are going to start FOMOing when, soon, when we start getting that move. I think it's going to be from where we are now, 21K to 40K. You'll have some people FOMO, and then other people won't FOMO until post 60K, all-time high region. That's just my opinion, but it doesn't really matter. Konksha asks, what is ADA's price target for May end? We did this a long time ago, but I'll go over it. And she also asked, which has a better ROI, Matic or ADA? I have a couple of dollars left to DCA in both projects. I can't really say. Let's see. So let's answer first the target for Cardano. So let's go back to Cardano really quickly on the high time frame. And guys, if you have anything you want me to look at, definitely just say so in the chat. So let's go on the high time frame. Here we are on the weekly time frame for Cardano. Okay, this is straightforward. Again, this is basic Elliott wave analysis. Whatever this is, it is clearly a 5-wave move. Okay, and when I say whatever it is, I mean by that, if this is pure impulse or corrective in the context of some sort of accumulation, you don't know, but it doesn't really matter. What's important is this is 5 waves up, this is 3 waves down, okay? And the other thing you can do is, okay, you can already eyeball the fact that those 3 waves down don't break the 0.618 Fibonacci retracement level, right? Which is all the way at 11 cents. So you know that this is a legitimate 3-wave down, keeping with this impulse, okay? But now, in terms of time, what you do, and guys, I hope this helps. Like, I don't, you can do exactly what I'm doing, and I'm showing you time and time again. This is it, and take my word for it if you like or not, but at the end of the day, you should be going back to some, good manuals in Elliott wave theory, and just prove this to yourself. And then the way you really solidify your analysis is by practicing, right? Trading, reading on your own. And so all of these rules, these guidelines, these principles become second nature to you. Okay. Actually, I would end this right here. Reason being, or would I? No. Right here. It's tough. It's tough to read on the weekly where the end of this impulse is. That's what I'm looking for, by the way. Right? Is this a 5-wave impulse? Is this a zigzag? Yeah, I think this is a 5-wave impulse. Okay, it's a treacherous, but run-of-the-mill 5-wave impulse. Okay, it looks to me, judging by the time discrepancy between the time it took up and the time it took to come down, that this is a corrective zigzag. Okay, so Cardano has never put in a purely impulsive wave. So what this is to me looks, based off of the time analysis that I just did, looks corrective. Okay. That being said, if this is not wave 1 and this is not wave 2, then we can't project a wave 3 because there is no wave 3. There's no wave 1, right? But if this were wave 1 and this were wave 2, then you could easily project wave 3 by taking the Fibonacci extension of wave 1, retracement of wave 2. But I just don't think, let's go on the daily time frame real quick. I just don't think that this is purely impulsive just because of the time. And again, in Elliott wave theory, there's a guideline that says waves of the same degree, particularly wave 1 and 2, are comparable in time and in price. Prove it to yourselves, read charts, and see. Every single time you find a wave 1, that wave 2 is more likely than not going to take just as long as that wave 1 took to print. And that wave 2 is going to fall somewhere between the 0.382 and the 0.618 Fibonacci retracement level. Okay, so here, just looking at it on the daily, just being a little more meticulous, I think it's quite clear to count the move up as 430 days. So here, 428 days. The move down, I would say the move down ends right here. Right there. Right where I put that dot. Okay. And I've looked at this chart before. So yeah, I would say that, so we said 428 on the way up. I would say about, if we take that as the orthodox low of this impulse, 411. Okay, there. It's comparable. It's comparable. So, okay, so we just proved it to ourselves. It's very likely. Okay, it's very likely, based off of the time analysis, and I just proved it to myself right there. I would put money on this discount right here. Okay, now let's go back on the high time frame. Again, this is quite simple. Nothing we're doing here is like crazy, and nothing is complicated, right? Good analysis is simple, straightforward. It's just making use of these time-proven, tested principles, and all we did was we analyzed these two waves, all right? This wave up and this wave down, and the relationship between them, all right? Obviously, the price relationship, you have a 0.382 to 0.618 retracement, so that is okay. But then the time, if the time between the time up and the time between the time down, if they're comparable, it's very likely that this is a wave 1, wave 2 situation. In that case, for Cardano, wave 3 is likely to end up, at the 1.618 to 2 Fibonacci extension, right? So that is pretty much it. Like, there's no sorcery, there's no magic. We would take the orthodox low. Do you see? I'm not going all the way down here. I'm taking the orthodox low, which is around here, I think. Okay. So that is our projection. Somewhere in this area right here. Between $884 and $5,700. That's the 1618 to 2 Fibonacci extension. That's how you do projections using Elliott wave theory. You have wave 1 and wave 2. It's pretty straightforward. So yeah, in that case, to answer your question, if you look at something like Matic, which we're going to go over, but I guess we could just do that right quick. it's so let's look at Matic really quickly. So looking at this, you would say that Cardano from here could put in 736,000 to, or sorry, 270,000 to 1,700,000. What am I saying? From here, Cardano could do 2700x, between 2700x and 17,600x, something like that. Okay, again, 1.618 to 2 Fibonacci extension is the average, your typical wave 3. That's just what we typically see. Don't know if we're going to get that. We may get an extension. We may get a truncation. The truncation's at 1 Fibonacci extension. Who knows? You can't say for sure. So that's Cardano on a high time frame. Let's just, for this thought exercise, go to Matic if you were to compare the two. And if you look at Matic on the high time frame, you also see an extension here. And that's 5 waves. And then you see a subsequent 3-wave move down. Okay? So let's actually remove this. And if we were to take... Actually, let's see. Okay, yeah, you would start counting from here. Right here. So if you were to take this bottom to top, okay, you see that 1, 2, 3, you just touched, you tagged the 382 Fibonacci retracement level. Okay. What do we know about the 382 Fibonacci retracement level? It is where typically the maximum retracement of wave 4. Okay, so it's possible that you can get some sort of wave 4 retracement here and then a wave 5. Okay, is that likely? I don't think so. And I'll tell you why it's not likely. So if we take the time, again, you always want to look at time when you're doing your analysis because it helps. It helps gain, it's just another really, really useful data point. So it took 196 days to come up all the way here. Okay, how long has it taken to print those 3 waves down? 385 days. Okay, that tells you something. That tells you something. Okay. There's another thing that I want to point out about this. Okay, we just pulled up any old chart. We're assuming this is the entire price action for this asset. But we don't really know what came before here and what this is. Okay, we kind of just assume that a 5-wave sequence started here and this was the subsequent retracement of this 5-wave sequence, but that may not be the case. This chart is a little less clear. It's a little more ambiguous. So I'm a very big fan of I don't know, and for this, given the ambiguity of what's going on here, what comes before here, and what role this plays vis-a-vis this uptrend, I would just say I don't know. I don't know. I think Cardano's a little more straightforward in terms of reading 5 waves up and 3 waves down. You have your time component that works, price component that works. Everything looks quite straightforward. This, not so much. Is it going up? Yeah, I think it is. But by how much? What is this in the larger scheme of things? I don't know. Is this a wave 4 correction? It may be. Going into wave 5? It may be. So I would say that if I'm trading both Matic and Cardano, I'm going to put more money on the table with Cardano because I am more confident in what it's more likely to do. Again, I don't know for either case, but I'm more confident in my high time frame read for Cardano than I am for Matic. Matic may be in a wave 4 correction and go up modestly for wave 5, or this may be, I don't know. I don't know where we're at. Do you see what I mean? So that would be my analysis comparing both. Okay, since we're on Matic, let's go on the smaller time frames. And as you can see, once again, you're dealing with really bullish consolidation here. And here it looks like a triangle. Looks like a triangle, right? This is what you would call a bear flag, or sorry, a bull flag, right? This is your flagpole and this is your pennant. And so you got this flat correction followed by what I believe is some type of consolidation reversal pattern, and you're continuing and you're likely to break up and out, continuing this trend right here. Okay? The other way to look at this, quite straightforward, is to just see this as making the higher high. You broke, you retested, you continued. Okay? You're flipping resistance into support and you're continuing. Okay? So that's what I'm seeing with Matic on the smaller time frames. Okay. So where were we? We talked about Bitcoin, Algo, Bonk. I think we were just on DANT. We looked at Dodo. Yeah, we did. Dogecoin. Okay. So Dogecoin is doing something very similar than what we saw with Matic. I think you can see that right here. Here you can see you have some sort of inverse head and shoulders, bullish pattern. You broke out. You're retesting it as support, retesting resistance as support. You should continue up and out. Very bullish. Ethereum, much like Bitcoin, you have your up and to the right consolidation. Super, super bullish. It's a rising wedge. Okay, again, these are likely to break up and out. Okay, instead of breaking down. If you look at your momentum indicator on the 4-hourly time frame, you're completely bottomed out and you're double bottomed, triple bottomed even. Okay, so you're likely to get a move up from here. Also, very interestingly enough, you're breaking strong resistance. Okay, this is resistance that you had since August. Okay, you can see here by this trend line, you broke it in January, early January, and now you retested it as support, right? With this consolidation, do expect to continue up. Do expect to continue up. There's one more thing I want to say about this. There's one more thing I want to say about this. This is it's tricky. Okay, Because if you go back to the 4-hourly time frame, question is, did you retest this this 4 to 5 month resistance? Did you really retest it as support? That's the question. What my answer to that, to myself, because I posed the question to myself in my head, my answer is, I wouldn't underestimate the bull run. Okay, if you're in this is not a sideways, this is not a corrective market, this is an impulsive market, right, to the upside, I always defer to the trend. So even if it looks as if this is significant resistance, even if it looks as if this isn't a sufficient retest, right, I'm not betting against the trend. That's my answer to that. I would say that trumps the idea to be technically, punctilious or like technically, perfect and retest to the dollar every single resistance broken as support. Like, I wouldn't worry about that so much. I would always defer to the trend. And I remember that lesson because a younger me would always say, oh, wait, I know what comes next. Because the principle is that this resistance broken must be retested perfectly. And before that, you don't go. And I remember quite clearly trading that scenario, waiting for the retest and never getting it and missing out on gains. And that stood with me. That stuck with me. And they always say one of the best ways to learn is to do, right? Especially when you're doing crypto and you're trading, because you don't really forget those lessons. And I remember how I felt, and I remember that lesson. So that's the last thing I want to say about that. Okay, Litecoin. Let's zoom out a little bit. So here it is, again, an impulse. Not a lot of people like, because it seems very choppy, but this is an impulse. And you're eventually going to get a big move up and out of this area. And you're likely to get it sooner than later, because what you're doing right now is you are butting your head up against, well, this was the resistance right here that I drew in, right? And we broke it. Did we retest it sufficiently? That's the question. That's the question. That is the question. I would not be opposed to something like this. Okay, as this comes up, it can come back down with this move. That would not surprise me in the least. Okay? Let's see. Let's see. It's around 78, something like that. Let's see. Yeah, that wouldn't surprise me. But we'll see. This is probably the most likely of all of the assets that we've seen up until now to do something like this. But I guess we'll see. Right? It again begs the question, how important are these little resistances, because who determines, like, the price doesn't treat every single last resistance as important just because you draw a line there. Like, we drew a line here only because this trend respects this support right here, many month support. And then it seemed to figure over here as resistance. But is it really that important? Will this just not continue? Maybe it just will, So, part of me just feels like, I don't think this is that important. And I trust that if the bull market is actually on, which I believe it is, that this is just going to continue to the upside. And what you got here was quite simply a breakout of this, okay? And this was sufficient retest of this neckline right here. And so you're basically just going to continue up like that. So that's what I'm seeing here. RSR, it's right at resistance, as you can see here. It's right at resistance. You consolidated, you dumped down, you came back at that point of resistance. The fireworks for this start once you break that. Okay, on the 4-hourly time frame, you're double bottomed. You've been correcting sideways for quite some time, a couple days, a few days now. Your next big move is up and out. SHIB, you can see something similar with SHIB. Here again, you can see some sort of triangle. It looks like a triangle. Is it a triangle though? Yeah, it looks like a triangle. Like, this looks like a really, really clean triangle. Okay. In Elliott wave, we count triangles using A, B, C, D, E. Okay. So essentially, you have 5 waves of 3. Okay. So I like that for SHIB in terms of this consolidation, right? Let's go in the smaller time frame. And so you could count this, I think. some like this. This would be your A wave, right? 1, 2, 3 waves down. Your B wave, 1, 2, 3 waves up. Your C wave, 1, 2, 3 waves down. Excuse me. Your D wave, 1, 2, 3 waves up. And your E waves, 1, 2, 3 waves down. Subsequent consolidation reversal. Breaking out of this triangle, consolidation triangle, would give you your breakout. So that's what I'm seeing with SHIB. Synthetics. I think this is getting started. Just getting started. It's move up. Okay. Now, one thing that's curious is that you put in a strong move with the momentum indicator going all the way back up into overbought territory without doing too much in price. Okay. You came up essentially to the top of the range. This isn't the best sign unless you got a breakout from here quite soon. This isn't the best sign for continuation. I'll be honest. Okay. But let's look at this on a smaller time frame. Oops. Oh, it's tricky. It's tricky. This is tricky. This is tricky. Oh, it's tricky. It's tricky. Okay. When in doubt, just simplify. Support and resistance, bread and butter. This looks to me like a double bottom of sorts, yeah? You can call it an Adam and Eve bottom, okay, where you would call this the Eve bottom and this is Adam bottom, but it's like a double bottom. This is a clear breakout of that bottom. Now, question is, do you get a retest like so? Or did you already put the retest in? That's the question. I think that's it. That's the question. Let's see. Yeah, that's the question right there. So let's just look at this, okay? Right. Oops. Let's just look at this. So on the hourly time frame, again, I see a running flat. I see a running flat, okay? When I'm analyzing this right here, yeah? And, you know, based off of what we just said, I see a correction, but it looks to me like this is a three-wave move. This is a three-wave move. This is your impulse, but it's a running flat because this impulse came down less than this. So you see this throughout the market. You're essentially getting a running flat, which is really bullish consolidation. Subsequent to that, you have a small consolidation move, AB base, right? We all know that price just doesn't switch modes like that. You need an intermediate kind of process, which we call AB basing in Elliott wave theory. And then you actually start your impulse. So for me, this is a bona fide beginning of your, or restart, or re-establishment, if you will, of that impulse, of that trend. That's how I'm reading that. Could be wrong, but that makes most sense to me. Okay. Tron. Again, this looks like really nice intra-wave consolidation where you put in a quick move down, subsequently some AB basing. You're looking for a big move up. Your momentum indicator says as much. XRP. This looks impulsive. This looks intra-wave corrective. I expect this impulse to continue. That's simple. Right? Also, if you look at it in terms of support and resistance, again, you have an Adam and Eve, or an Eve and Adam, whatever you want to call it. You broke, retest it, continue. Keep it simple. Zilliqa, really nice example of a leading diagonal, or sorry, not a leading diagonal, an ascending wedge, right? This is a corrective move, ended right here, I believe. I don't think this is a triangle. I think this is a running flat correction that essentially went like this, boom, boom, boom. And then everything you see here is a consolidation reversal, and that is when you get your breakout. And again, I understand and I appreciate that these are not the easiest reads on the small time frame, and that is why, one of the reasons also why a lot of people are bearish, or they expect these to break down. One, because you don't see running flats and up into the right consolidations every day. Two, because this, it's corrective price action, intra-wave corrective price action. When you're printing complex corrections, tough to read. They're not straightforward. Okay. Let's see. V-chain. Again, my analysis, simply put, would be to treat this as some sort of cup and handle, Adam and Eve breakout, retest, continuation. That simple. Keep it simple, right? I'm expecting continuation. Not only that, in this case, if you zoom out, you can see that you're right at resistance and likely to break it. That's when you get your big breakout, your big fireworks for V-chain. Breaking this resistance, that has taken 300 days. Right? Because you came into this resistance in May. I think this is very clear. Theta is similar. Similar in that if you go on the smaller time frame, you can see you're just now putting in, you put in a Adam and Eve or whatever cup and handle pattern. You're retesting, let's put that in properly, a neckline. Actually, is your neckline down here? That's the question. That's the question. I think it's like this, and you just retested the neckline down here, and here is your breakout from here. Okay? So that's what I'm saying. Telcoin. Let's zoom out. Really volatile on the small time frames, but I think the analysis is pretty straightforward on the high time frame. High time frame, you can see this trend line helps a lot. It was resistance, broke below it. It became, it was support, broke below it. It became resistance, and we just flipped it back into support right here. Okay, and now expect this to break out. That's it. Even higher time frame, if you look at this, whoops, what do you see? 5 waves up, 3 waves down. 5 waves up, 3 waves down. And looking at the nature of these 5 waves up, I think it starts here. No, I think it starts. I think it starts here. So I would take this 161. It's tricky. I think I was right in the beginning. Probably starts here. Okay, so about 413, 420 days up, and approximately, let's see, 400 days. If we go on the daily, let's see. Let's remeasure that on the daily time frame. But if they're comparable, then I would say this is a wave 1, wave 2 situation. More likely than not. Or even, ooh, wait. Just looking at this now, it looks to me this could veritably be some sort of 1, 2, 3, 4 leading diagonal. In any case, what I believe is that all of these waves are connected. This is my sense. And that you're going to get a big wave up. Okay? And so that's what I'm looking at on the high time frames. I don't necessarily think that this is a wave 1, wave 2 situation. I think this is more likely than not wave 1, wave 2, wave 3, wave 4, and you're going in for an extended wave 5. Okay? And this would be literally the best entry point based off of our smaller time frame analysis. So that's Talcoin. Matic we already did. And DYDX should be the last. I just added this yesterday. And as you can see on the high time frame, this came out, went up, went down. This is customary. This is very, very common with new tokens. Just, people distribute the tokens because they get free tokens in an airdrop, and they don't know what to do with it, and they take profit. What you see from May until present day is a series of consolidations where the price is accumulating and sort of absorbing all of that supply. So what we should expect, just like the rest of the cryptocurrency market, is a bounce from this support level up and out of this accumulation range. That's it. That's the high time frame read. Okay, so I'm saying don't just expect us to come up here, but also to break that channel. So what I would do is on the smaller time frames, I would regard the current impulse as an Elliott wave impulse. Okay, how to count it, I'm not exactly sure, but it may be that this is sort of wave 1, wave 2, wave 3, wave 4 situation, and then you're probably gonna get a wave 5 coming up here somewhere. Okay, wouldn't be surprised if that were the case. And once you get to this top right here, you do some sort of correction, and then you carry on, something like that. Okay, so that's what I'm seeing for DYDX. And guys, that's it. I do expect massive moves in the entire cryptocurrency market very soon. And I hope you're able to take advantage of it if we do get something like that. All right. Take care. I'll see you tomorrow. Bye.